Macroeconomics is just like Keynesian nonsense, and it's all equations, and they don't refer to anything. It's all pseudoscience, whatever. But like, you don't really go into enough detail on any of it. I believe I introduced myself as a professional shitposter. I'm just like, I'm not an expert in this. I don't claim to be, I don't pretend to be. I don't want anyone to think that I am. They very self-consciously reject a lot of like financial market shenanigans that now I would blame on fiat. Like I would use fiat as an adjective, as like an insult to describe this. We're most interested in companies that are using Bitcoin as technology to do something, to create some good or service that either wouldn't be possible at all otherwise, or maybe if possible would be significantly more expensive. Soliciting investments for securities is quite heavily regulated, and I don't want to go to fiat jail. Stablecoins are, while in some key respects that are obvious to Bitcoiners, like kind of stupid and kind of bullshit, there are other respects in which they are vastly superior to fiat.
Hello and welcome to another episode of You're the Voice from Lugano, Switzerland at the Plan B Network Proof of Work space. I am with Allen Farrington. Hi, Allen.
Hi, Efrat.
How are you going?
Very well. How are you?
I'm very well, and thank you for joining me.
Thank you for having me.
Yeah, I appreciate it. We met a year and a bit ago in Prague, I think.
We did, yes.
At Svetsky's get-together. And since then, I've been following you, and I really like what you do.
Thank you so much. And I'm glad I made a good impression of this.
You did.
Could have gone worse.
You got a great sense of humor. You write really well. I actually like and enjoy reading your writing because you write in a very simple way. Like the way you write is very easy to read because it feels like you're talking. You
might be the first person to ever say that.
I mean, it is long, so you need to be concentrated and read what you write. But once you start doing that, you know, and obviously you have to stop and go research some terms if you're not familiar with them. But assuming that you are in this space and you know the kind of stuff you're talking about, you write in a simple way. Sometimes people use very high language and a little bit sophisticated. I like the simple way in which you write.
I am very thankful. I'm a bit confused. I think my detractors would be equally confused, but hopefully some of the audience isn't. Hopefully this resonates with people.
People love what you have to say. I'm sure of it. Okay, so just for my audience that may not know you, I'll give a quick intro about you and then we'll jump to the questions. So Allen Farrington is a prominent writer and investor in the Bitcoin space. He co-authored Bitcoin is Venice and Only the Strong Survive. I haven't read either of them. I have to. And co-founded the venture capital firm Axiom, focused on Bitcoin-centric ventures. All right, let's dive into it. What personal journey led you to dedicate your career to Bitcoin?
Ooh, career is an interesting one because usually I'll get asked in slightly more general terms, you know, like how did you find Bitcoin in the first place? That story is actually kind of boring. I think the career one is more interesting. Should I just tell both? Because it kind of bleeds into the career.
Let's do it. Go for it.
I mean, not that it's boring. I don't know. I just feel like I've definitely heard other people's stories where they have some more obvious kind of eureka moment, if that makes sense. You know, like something happens that completely changes your perspective. And basically, I just don't have that at all. I have very, very slow burn, many different influences, and I kind of gradually tiptoe in. With the exception of then diving in full time for work. So actually that's kind of the end of the story anyway, and that's the more interesting part. I'll skip over the early part precisely because I just don't think there's that much to really comment on. I first became aware of Bitcoin and I don't even really remember the exact date. I want to say something like 2013. It's one of these ones that's funny. I remember my own circumstances. So like I was a student at university and I remember you know, where I was and like what year I was in and that kind of thing. But that's all I've got. So I don't really remember. It actually could have been 2 calendar years. It was 1 academic year. I think it was 2013. And at the time, I think the best way of describing it is I was very lucky in my sort of combination of interests and endeavors that made me very predisposed to at least not dismissing it. I'm always hesitant when I describe this because I don't want to say like, oh, I got it right away. And I also always like to cite both the kind of the meme, but I think it originates with a really good blog post by Jameson Lopp, which is Nobody Understands Bitcoin and That's Okay. That's worth rereading from time to time, like every year or so. Go back and reread that because it's worth staying humble in accordance with what Jameson says. And if he says it, then obviously everyone else probably should say it as well. So yeah, not at all that, 2013, I just got Bitcoin right away. But I had a bunch of influences at the time that led me to at least take it seriously. Because I think most people's stories are like, they remember the first time they heard about it and they dismissed it. And then they find it X many years later and it's gone up Y times. And then they take it seriously.
Yep.
So I at least took it seriously from the beginning. So the influences led to that, where I mentioned I was a student. At the time, I was studying math and philosophy. So they are both, in their own way, lend themselves. It's not like a perfect translation, but it's a good starting point at least. Completely coincidentally, I was pretty well read in Austrian economics, so there's a lot to grasp onto there. Even at the time, there wasn't that much.
What led you to Austrian economics?
So actually, that's like a separate story within the story. I'll try not to spend too long telling it, but it is actually pretty funny. So I studied economics in high school, which is quite unusual in the UK, at least. It's not that
everywhere,
common.
I think.
Maybe everywhere. Okay.
Yeah.
Well, so, I mean, I can only speak from my own experience. That it is something that you can choose, but a lot of schools wouldn't even offer it. And then even in my school, hardly anybody took it. But I took it. And the way that economics is typically taught, especially at that it's obviously pre-university, so it's very introductory. There's not a lot of insight. It's just kind of a wide view of a bunch of different areas, but the obvious split just at the very top level is like microeconomics and macroeconomics. And if you're not going that deep into it, the way that they typically break up like the content effectively is that microeconomics is really just business. It's like business administration and a bit of common sense and like logic. So that's all fine. And then macroeconomics is just like Keynesian nonsense, and it's all equations. And we now know I didn't know at the time, and that's what makes the story funny. But we now know that they're just like, they don't refer to anything. It's all pseudoscience, whatever. But like none of it, you don't really go into enough detail on any of it for it to be that impactful. I don't think for most people, at least, it's like very surface level. But anyway, but they also teach it in that order. That's the interesting part. So we did all the microeconomic stuff, and it's basically just common sense. So that was fine. And then we got to the macro part, and I could just tell that something was wrong, right? I couldn't articulate what exactly.
Why? Yeah.
This is the origin story of then having become educated enough to say why in much more detail, and even before studying math at university, for example. But I could just tell that like the way they were using the math just wasn't right. I couldn't really put my finger on it, but something was wrong. And so I told my dad about it. And I'd relayed basically that story, and he chuckled and then went and got off the shelf, I don't actually remember which book, but a book by Mises. And I think he did that as kind of like a theatrical gesture, because we then did talk about it. It wasn't just like, go away and read this and leave me alone.
Yeah.
But I do remember it, like it worked as a gesture, right? It was impactful. And so that would have been a couple of years before what I was describing when I did then find Bitcoin. But that was right. That was the origin. So I say relatively well read. I wouldn't have read absolutely I mean, even now I haven't read the entire canon, but I went through kind of the classics earlier on while still in high school, and then never encountered economics again in an academic setting, studying math and philosophy, but had that background. So that again lent itself very nicely to then not understanding, but at least appreciating Bitcoin. The final thing I should throw in too is that the only like real job basically I'd had at that point was as a software developer. So I say real as opposed to like I did all kinds of stuff in uni for minimum wage, like flip burgers and park cars and that kind of thing. The first job that was like I could conceivably have had a career in, even though I didn't, was software engineering. And I actually I wasn't very good at it. So I couldn't even have had a career.
You and I both.
But I did it when I was that old, and they did pay me, and I did, give them some value, I think. So all of these influences combined were super helpful to not dismiss it. So that's kind of, maybe that part is interesting enough. That's like the very beginning. Then a lot of time passes where not a huge amount happens other than just like gradually inching more and more towards where we are now, like learning more about it, buying some. That's also important. I actually didn't buy right at the start because poor student, no money, negative money, actually. Eventually bought some. That's obviously very behaviorally important. I'm sure everyone watching this understands that, doesn't really need that explained to them.
Yep.
So when I left uni, I worked for a company called Baillie Gifford, which is based in Edinburgh, which is why I then ended up living there. Very nice place, very, very good company. Interesting detail here is, so they're what's called an investment manager. And in super layman's terms, my job there, and like all my colleagues' jobs there, is we get money from mostly pension funds. They want us to invest, and we invest in companies, right? So it's equity investment as opposed to like bonds or real estate or commodities. There's a whole bunch of different things you can invest in. We invested in companies. And we can go into this in a bit more detail if you like, I guess, but I do like crediting them because they're very, very unusual within the industry, for reasons that I won't go into like a whole commercial for them, but the reasons overlap surprisingly strongly with Bitcoin. So I think that was probably an important influence as well, as in their outlook on how to invest. I wouldn't say it's Bitcoin-y. I don't think it's like, there's definitely no deliberate connection with something like Bitcoin, but I do think describing it as Austrian is maybe viable. They wouldn't describe it that way, but I don't think they necessarily reject it either, just in the sense that they're very long-termist in outlook. They very self-consciously reject a lot of like financial market shenanigans that now I would blame on fiat. Like I would use fiat as an adjective, as like an insult to describe this. They wouldn't do that, but it's easy to sort of identify them as the same thing. In their minds, they're saying, they want to avoid these short-term noises and find long-term signal in genuinely disruptive companies, whether that's coming from new technology, new business models, whatever. They don't just want, fluctuations of repricing as shares go up and down, as they are inclined to do. They want real transformation and like misunderstood value that realizes itself over 10 years plus.
You're the Voice is brought to you by Trezor, the original Bitcoin hardware wallet company pioneering the development of self-custody for crypto assets since 2013, empowering individuals with an open source device, enabling beginners and experts to easily and securely hold their coins. I find my Trezor super easy to use and recommend it to my friends and family. Enjoy my 5% discount on Trezor products by clicking the link in the show notes and using the code FLAT.
Self-custody is powerful, but what if someone forces you to unlock your wallet? Bitcoin settles instantly, and that freedom can also be a risk. BitVault is the first Bitcoin wallet built to protect against both physical attacks and digital hacks. It creates a banking-grade vault on-chain with 2 of 3 multi-sig, time-delayed transactions, 2 hours to 15 days, giving you space to react, trustless recovery after 1 year, works with trusted hardware wallets, open source, and built with one focus: beyond keys, protecting humans. Only 42 lifetime subscriptions are available at $199 forever. Head over to bitvault.sv to sign up and use code FLAT for 10% off.
So in that setting, also not all that surprising that I was encouraged to not directly go and look at Bitcoin, but that was a very almost fertile environment, if you like, to be thinking about Bitcoin anyway. And so that then finally leads up to doing it professionally. The reason I ended up doing it professionally was pretty straightforward, which is that around 2021, or maybe late 2020, early 21, having been there for 7 years at that point, or nearly 7 years, I had never had the chance to act. So they one thing, we couldn't buy Bitcoin there. That's probably an important thing to mention out the gate, because they only invest in companies, right? So like right when I joined, unfortunately, as amusing as it would have been to have bought Bitcoin in 2015 and it goes up 1,000 times or whatever it did, I was instead in a position where, which I think is like much more interesting on the face of it, but also clearly benefited my career. I had to think instead about how Bitcoin would be relevant to companies that we could invest in. For a long time, it just wasn't at all, which is also helpful just in terms of like understanding the industry, spending some time basically being trained, which is, good when you're going into an industry straight out of university. So that's all fine. But by 2021, there finally were companies that were not only big enough, but philosophically aligned enough. So again, I don't want to become a Bailey Gifford commercial, but they have very concentrated portfolios and a very specific philosophy as to what kind of things they want to invest in. And so, for example, miners, like publicly listed miners, don't really count. Exchanges could in theory count, but none that we ever saw did. And so it took a while for ones that we did want to look at. And basically, as soon as I had the opportunity to look at these companies professionally as an investment analyst, I was just completely hooked. And to be clear, I really liked my previous job. I mean, I did all my what would you call it? Brand building or like shit posting, basically. I've been doing that for a long time. Even though I was very careful for many years to never allude to what my job really was. I just didn't want to get in trouble at work. So I never talked about the price of Bitcoin or investing in Bitcoin or anything. I basically never said anything that could even possibly be misconstrued as financial advice. So like everything I was shit posting about was very kind of academic. And obviously writing as well, not all entirely tongue in cheek. But then when I had the opportunity to look at these, so I knew all the companies, right? And in a lot of cases, the people knew who I was as well. I never had the opportunity to look at them from that professional perspective. I had basically just been like a fan via Twitter. And so that was really, really interesting. It kind of rewarding in its own right, but I think the crucial thing, and my co-founder, Anders, felt the same, basically. We'd known each other for a while. We worked at different companies, but we were looking at the same things and seeing the same trends. We felt that around that time, what would then become the first venture fund we did at Axiom, which we started in 2022, we felt that could be done, basically. I think you probably could have done it a little earlier than that. And there are other Bitcoin VC firms who did start up earlier, but I don't think it could have been done that much earlier. I think our timing was pretty good in terms of recognizing like this is, and to be fair, I don't know how far down this rabbit hole specifically you want to go. It's basically because of Lightning, as in by that point, Lightning had grown enough, not only as a technology, but probably more importantly from our perspective as an ecosystem around that technology, such that it kind of was it. So, I mean, it definitely is now, but even then it was kind of becoming its own sub ecosystem within the overall Bitcoin space that you could point to and you could justify focusing venture investment on. And so that's what we did. That then leads to Axiom. So it's basically getting to that point was the year or so across 2020, 2021, realizing, one, I like this way more. I'm way better at this, which is hardly surprising. But also the opportunities there to actually do it. Had a co-founder who felt the same way, and here we are.
Wonderful.
Obviously a lot happened in the meantime, but that's
yeah, sure.
Axiom.
Sure, but thank you for giving me that background, which then just has me think, what kind of companies do you find that are the best for you to invest in today in this space?
That's a super interesting question. So we like to think we have a pretty specific investment philosophy, which is in part inherited from Bailey Gifford from my end, Anders' former employers on his end. In the sense that, our goal is not to just invest in every Bitcoin company that we find.
Right.
That said, I mean, even for our first fund, we're in the middle of our second fund now. Even for the first one, it's not been anywhere near long enough to tell whether they're successful or not. So I'm hesitant to name individual. I mean, maybe I'll name some that people will know, just to use it as an example in that way. I'm hesitant to be like, oh, this one's obviously amazing. I'm obviously not going to say this one's terrible, but we probably don't even know in either case yet, really. But the gist of our investment philosophy is as follows. This, I think you definitely will find interesting. And I can then go to give some examples of this. We're most interested in companies that are using Bitcoin as technology to do something, to create some good or service that either wouldn't be possible at all otherwise, or maybe if possible would be significantly more expensive.
Right.
There's a handful of reasons we're interested in this. So as opposed to, for example, like number one, obviously we don't do crypto
Sure.
You don't need
Sure.
that explained, but you'd be surprised how many people do need that explained. I say Bitcoin, they say crypto, I say no
I know.
Bitcoin. No tokens either. That's maybe kind of obvious with the crypto overlap, but there's tokens of Bitcoin now, so worth clarifying. We're not doing that either. It's pure venture. You know, Bitcoin is the theme in the way that the theme could be anything. It could be biotech or SaaS or whatever. Our theme is Bitcoin, but we're very much making venture investments. And another thing that it is kind of easier to understand, I think, in the negative in terms of like what we don't really want to invest in is companies where the connection to Bitcoin is only really like financial exposure, like they have it on their balance sheet.
Sure.
And to be completely clear, we have nothing whatsoever against that. I think those for the most part, companies that do that well will do tremendously well. It's more a philosophical point in that we don't really think we have any particular skill in identifying that. Like our skill is in understanding the technology and access within the community to identify basically misvalued opportunities because so few other people understand the technology. I've described it before. This might be a weirdly unhelpfully conceptual, I don't know, but I quite like referring to it as basically just temporal arbitrage, right? So like we're arbitraging the fact that currently nobody understands this. And in 10 years, which is the life of the fund, everyone will understand it, or at least way more people will understand it. Not really that much needs to change in the meantime, other than the people who in 10 years will realize that we were right, realizing that we were right and being willing to pay us much more than what we paid now. Which is deliberately, like, I realize that makes it seem kind of crass, but in a way it is, because I don't want it to sound more romantic than
you're living the we are early in your venture life.
You'd be amazed how often I say we are early. Usually is cope. Usually is like when something's going horribly wrong, it's like, don't worry guys, it's because we're so early. It's because we're so early. You have no idea how right we're going to be, just not now. Like in the super long run.
Yes.
So so that's what we think are the actual value that we're adding to our LPs is it's a combination of understanding and access that most other people don't. I don't even mean most other Bitcoiners, just like most in the entire world, most of the people don't have this. And the other thing too is we don't hold Bitcoin in the fund, so that's kind of falls out of a lot of things I mentioned so far. Just, you know, like we invest in companies, we don't invest in tokens. Bitcoin is a token for what it's worth, even if you hate that framing. But for a similar reason that LPs can just do that themselves, right? They don't need to be paying us to do something they can just do for free effectively, and that they should, and that we encourage them to as well. Of course. So that's kind of like rounding out a bunch of things that we don't invest in, and that then narrows in on like what's left over, or the subset of what's left over that we do find really exciting is kind of technology plays. That's where we think we're uniquely positioned to try to determine basically this, like, you know, the arbitrage opportunity, the idea that something will be incredibly valuable, but people don't really appreciate this yet. The other interesting point though is, so something that we're not completely against this, but I'd say we shy away from, we tend to be pretty nervous about. One way of thinking about it would just be like direct to consumer companies. That's not quite right, but it does, like a lot of the things that we get nervous about are direct to consumer. The point is really more companies where, and this is like another almost negative screen, just to see the kind of thing that we're not that interested in. Companies where the appeal of the product or service kind of relies on hyper Bitcoinization. Like it would be an amazing idea if we had already hyper Bitcoinized,
right? But
we're trying to be a bit more like disciplined and basically honest with ourselves about where we are in Bitcoin adoption. That's why we like using Bitcoin to do something that you don't even necessarily need to understand Bitcoin to describe. That's why we find that so attractive, because that only relies on Bitcoin working as technology, which it kind of clearly does. If anything, the far bigger challenge is like general education and people coming around to it. Not even mentioning price. It's like this precedes price, right? It's getting people to understand why they even need to use this in the first place. And so what gets us really excited is if there's a company that's building something that, Bitcoin is technically fundamental to how it works.
Yes.
But the actual service, like maybe you could know Bitcoin's involved, but you don't necessarily need to. That's really exciting for two reasons that are kind of the flip side of each other. So one is that it suggests a massive market because you're not confined to the your 5 friends who also like Bitcoin, right? Or however many, I don't know what the exact number is, but I would guess it's probably fewer than 1 million people worldwide like have any real understanding and appreciation of Bitcoin. You can ignore that because you're not like a Bitcoin company. You're a whatever. You're a payments company, or you do something in capital markets or energy or whatever it is, right? Like that's your market, and you're just using Bitcoin as a tool. So that's helpful from our perspective in terms of getting comfortable with, this company could be really big and this will be a really good investment.
I'm guessing there are not many companies in
there's
that.
Not many, but there's
there's
a decent amount. And this was like the gist of what we realized in 2021, that roughly then there were starting to be a lot more, again, because of Lightning. And we invest beyond, like it doesn't need to be just Lightning.
Yes.
Come some examples of this, but certainly then Lightning was kind of a focus. And I'd say probably most of the companies that we have invested in it have at least something to do with Lightning.
Right.
Which only really means that they have something to do with payments, right? Like it's not that it's not as powerful as it sounds necessarily once you realize that like a payment is half of every trade. And if you're Bitcoin centric, then you're probably going to want Lightning in the mix for at least something in what you're doing. So it's not really that different from just saying Bitcoin, frankly. But the flip side of that point, though, this is where I think it gets really interesting. Like you could argue that's like quite cold and calculated as like, oh, we want, you could kind of caricature it as like, we want companies where you don't need, like, you can pretend Bitcoin's not even involved and like get away with it, right? Which we don't say that, but like, I wouldn't disagree with that way of capturing it. The flip side though is that I actually think so that's like kind of a cold financial take. But if you had more of an ideological take, if you, even for the sake of argument, literally didn't care about making a return on your investment, you just thought of this as charity, which I don't think anybody does. But for the sake of argument, if you did, I think you would still want to back those companies as opposed to the ones that are much better suited to, already having hyper Bitcoinized. Because I think that's a much, much better way of educating people about Bitcoin. If you get them using some service and they're like, oh my God, this is amazing. Like, I didn't know this was even possible. Or I thought this was 10 times, 100 times as expensive, whatever. And they don't even know Bitcoin's involved and they just start using it. And then 5 years later, someone tells them, this runs on Bitcoin, by the way. They can't, like, they have no way out at that point. They can't continue to kid themselves that Bitcoin isn't useful because they know it's useful because they've used it.
Yeah.
So I'm actually quite hopeful. This is obviously tangential to like our purpose is to make returns for
I get it.
Like we do have to abide by the fiduciary responsibility implied in point 1, but point 2 is exciting too. Like the flip side of it is quite cool and I think it's completely real. Like I think a number of our, again, probably not every single one, but a number of our, what turn out to be our more successful investments will perfectly embody that point in another 5 years, 10 years, maybe.
Super interesting. How many companies in your portfolio today?
I should
more
know
or
the
less.
exact answer. More or less 25. So
25.
we had 21 in Fund 1, which wasn't like a gimmick. Just I feel
really?
like
you landed on 21 and closed the
I feel like I always need to clarify that wasn't on purpose. Like it just happened.
Yeah, right, Alan.
We've started deploying from Fund 2. There's some over. This is why I don't know the exact number. There's some overlap with Fund 1, but there's some new companies as well. So I think it's 25. It might be up to 26 now.
Got it. And Fund 2 still have a way to go. So like,
yeah, we've only just started.
Pitch Alan, but don't pitch him the wrong thing based on the explanation.
It's quite soliciting investments for securities is quite heavily regulated, and I don't want to go to Fiat jail, so I'll be careful.
Cool.
Tired of feeling like your freedom and future are fading away? Do you live in a country with growing inflation, crazy housing prices, weird culture, and a chaotic economy? You're not alone, and my friend Mikkel Thorpe and his team at Expat Money can help. Mikkel is the world's leading expat consultant on a mission to free you from broken systems. He's been an expat for 25 years, lived in 9 different countries, and has helped hundreds of people with second residencies and passports, offshore banking, international investing, and many other essential tools. If you're serious about protecting your wealth and your family, it's not enough to hope things will get better. You need a plan B in another country. The team at Expat Money can help you build it legally, safely, and without wasting years of research. Visit expatmoney.com/eflat and leave your details for a follow-up. In a world hypnotized and sleepwalking towards totalitarian control and digital enforcement, awakened voices rise to inspire change and radiate hope. In December 2024, I had the honor of hosting Professor Matthias Desmet at a conference I produced called New Totalitarian Order. This masterclass is now recorded and available to watch. The conference explores the psychology behind global mass processes, offering a behind-the-scenes look at science, economics, and human potential. It addresses challenging global agendas, mass formation, transhumanism, consciousness, societal change, and the path to transformation. Click the link in the show notes to access 3.5 hours of exclusive presentations, in-depth content, and my fireside chat with Professor Desmet. Use my code EFRAT for 10% off. I hope you find great value in it.
All right, so let me take you to another area. Let's talk a little bit about stablecoins. I've recently read your article from April this year about stablecoins, which is super good, and I may put a link there in the show notes to that article. We're seeing growing momentum in the US around legislating stablecoins right now. I mean, it's happened. Now we've got the Genius Act passed recently. I know you're not on Twitter, but I guess you know that, right?
I mean,
you are aware of that.
I am on Twitter. I'm just, this is reflecting what we were chatting about before recording, that in the past few days, I've been on Twitter less. And therefore, I didn't know some ridiculous British thing that they're going to sell all their Bitcoin or whatever. But I am still on Twitter. I know. I believe I introduced myself as a professional shitposter or something to that effect.
You are a professional shitposter. I can tell. So we're so the legislation has passed in the US, and some people celebrate it as regulatory clarity, while others warn that this is a backdoor to CBDCs. And I see posts like as clear as, and some of them from Bitcoiners, some of them from just freedom lovers that don't know Bitcoin, but they post stablecoins equal CBDCs. Yeah. What's your take on where this leads, and how should we think about stablecoins or CBDCs concern?
There's a few different points I'd make.
And we'll dive deper into the article.
Sure. Yeah. I'll leave the article even for now. We can go deeper depending on where you're most interested. So, first of all, I don't at all consider myself, like, I genuinely, we're joking about like not knowing about the Rachel Reeves thing. I really don't know that much about the Genius Act. I'm aware it happened, but it's kind of...
Well, I think the gist of it is that they have to hold a full reserve of US dollars.
Basically, from what I gather, it's like the US is more stablecoin friendly, more kind of crypto friendly in general. Right?
Exactly.
But I'm not going to, clearly by that answer, I'm not going to claim to know that much more about it, because it's really not a worthwhile investment for me of like the time to learn about this. I'm honest, just to...
Yeah.
I'm not sure whose time it is worth, but like it's minimally applicable to what we do day to day. So just describing it as like probably positive from a regulatory, almost certainly positive from a regulatory perspective, it's kind of enough. I mean, the other thing too is that the only reason it would affect what we're doing is specifically how it affects individual companies we've invested in. And I'd much rather they tell me. Like, I'm not going to I'm not going to do my, my whole think boy thing. I'm like, write an essay for them. We're like, is this what's going to happen? And then they say, no, I just wait for them to tell me. And for most of them, I don't think there are some that do have some exposure to this. I mean, we'll get into that because it's like the overlap with Lightning that brings that about in the first place. So that's one point. I'm just like, I'm not an expert in this. I don't claim to be, I don't pretend to be. I don't want anyone to think that I am. Couple other things that you mentioned in the question. I think my overall attitude to it, and this is very much the attitude with which I wrote the piece that you want to talk about more, is to try to not be kind of normative about it in a way. Like I see what has happened, and then in particular leaning to what I think will happen with Taproot Assets, as I don't want to say predetermined. I'm not like a technological determinist, but that it's possible to view it without seeing it as ethically good or bad. Not that you deny that, not that you think it's neither, but that you can just see it as like, well, this was gonna happen. This is something like this was probably gonna happen. And that's I think that's, for me at least, I don't begrudge anybody else making the case that it's really bad or even really good I haven't heard any Bitcoiners say that, but I'm sure somebody has that attitude. I just don't find it that interesting because I feel like I've kind of spent all my energy on like what is, on that kind of normative angle over the years, on really just on like fiat in general and how horrible it is. And I don't see that much value like railing against this too hard. And maybe one of the points I might be kind of copping out a little bit on the basis that I do actually see a positive angle for Bitcoin, but it's sort of subtle and behind the scenes, and I get why people would be uncomfortable with it. So that, I'm sure this is exactly what we're going to get into in terms of that development with Lightning, with Taproot Assets, and
that's
so
what I
on.
want to break down with you, like how this leads us to a positive trajectory for Bitcoin in the long run.
Right. Well, one other thing I did want to mention just before, because I think this sets the stage nicely too for then exploring where I think it's going to go. Again, purely for technological reasons and kind of economic reasons, not so much because it's like, oh, it's a good thing, or even, oh, it's a bad thing, and like the evil people are in charge and they're going to make it happen. But the final thing is one of the things that actually motivated me to write the piece that really doesn't have anything to do with Bitcoin at all. Or I guess it does in the sense that my initial bias, which I think a lot of Bitcoiners share, is like stablecoins are crypto's bad. Therefore, I can just ignore this and it'll eventually go away because everything in crypto goes away because it's all bullshit. So I had that for a long time, and it didn't go away. And a lot of where I landed in terms of the thinking about what will happen next came from trying to be a bit more serious about why it hasn't gone away, rather than just being like, oh, this bullshit is going to go away. And so the final thing I want to mention before we then go in more detail into the piece is I would encourage people to appreciate, to the extent you want to think about this at all. I mean, you can just avoid it and only think about Bitcoin. But if you do want to look at this space, I encourage you to appreciate that stablecoins are, while in some key respects that are obvious to Bitcoiners, like kind of stupid and kind of bullshit, there are other respects in which they are vastly superior to fiat. And I think that's a gist of why they haven't gone away and why they're actually pretty popular. And
product market fit is...
They have a certain product market. I don't want to overplay it because, again, I'm skeptical of it. But they do have a product market fit in ways that have nothing to do with Bitcoin. This is why I'm saying, like, you can just ignore Bitcoin completely. They are, while deficient in some what I think are key ways that will be ironed out in the long run, they're superior to fiat in some ways as well. And that can annoyed me for a long time, but I'm kind of over it now. So here we are.
Yeah, well, you can resist reality or you can just accept that that's the way it is.
Well, I think I'd push back a little just in the sense that I think the instinct is still valuable. You should still be like, crypto, I don't know about this.
I'm with you.
Which actually sets up where we're going nicely.
Exactly. So if we're arguing... you're arguing in your article that today's stablecoin systems are fine until they're used too much.
Yeah, basically.
Right? Can you explain in plain terms why these systems breaks under real demand?
Yeah, so it's basically rooted in this is where the hunch about like crypto, and not so sure. This is where it comes in.
Yep.
That to reduce it to basically just a slogan, right? Blockchains are for money.
Yep.
I guess slightly more specifically, something like blockchains are for a native monetary unit, right? Because you could kind of weasel out of that with like, oh, stablecoins are money, but like, no, they're not. They're real world assets. If you want to get all like tradfi with the lingo, they're not the native token, right? You still have Ether, Tron, Solana, whatever. So from that starting point, no matter what you do, if there's significant usage, you're going to bump up against the same constraints that make basically every other crypto use case kind of dumb, which you could flippantly describe as like, well, it's not money and it's not Bitcoin, which again, I encourage people to keep that in the back of their mind, but I will attempt to flesh it out a little bit more than that. Basically, you'll always have the problem of pushing for more decentralization, creating gas fees that explode the use case, or probably in terms of like how this comes about, reacting to that, pushing for more centralization that destroys the rationale for using a blockchain. So I'll go through it in that order because that is typically the order it happens in. So you start off, you issue a bunch of tokens and you're like, these are dollars, right? It's fine when no one's using it. Basically, when there's not that much demand, it works pretty well. And it certainly works better than fiat, which is how it gets traction. But the more people use it, this is true of Bitcoin, by the way, too. But I'll leave for now the rationale. Like every Bitcoiner kind of knows how to explain why it's not a bad thing. It's actually a good thing in Bitcoin because it's basically just contributing to security, and you scale in other ways. But in crypto, the more people use it, fees go up. Eventually, or actually pretty quickly, it becomes unusable because the percentage of the fee as, you know, of the overall payment is just like totally untenable. If you have to pay like even as small as $10, which in the scheme of like Bitcoin transactions isn't that big a deal, it completely ruins this because, you know, if your obvious comparator is something like maybe credit card fees on the one hand for one type of transaction, the all-in cost of using Swift for, you know, completely other type. If it's $10, never mind, you know, as times it goes up to $50, $100, whatever. The implied transaction fee is just not tenable. And basically this, you know, this has happened in the past, not really because of stablecoins, but because of just broader crypto usage, usually at the peak of some scam bubble or other. But the point we're at now, which is quite interesting, and hence like the Genius Act and people getting all excited about it, and like mainstream fintech thinking, oh, I need to do something with stablecoins. I don't think it's an unreasonable prediction that the next crypto bubble, I don't know if you call it a bubble exactly, but like the next fee spike basically will be because of this massive interest in stablecoins without people having thought this through properly, that the more people use it, the more the fees are going to go up. And that makes it unusable and you kind of can't win. So the natural reaction to that is, okay, well, we won't have it be like main chain Ethereum or main chain Solana. I'll leave Tron. I'll come back to Tron in a second. Tron's interesting because it's the most value typically, it depends exactly how you define it and over what periods and so on, but typically the most value settles on Tron. But the reaction is, okay, well, we'll move it to, like, they call it layer twos, but I have to do this. I'm doing inverted commas if people are just listening and can't see this. Because there's effectively no such thing as a real layer two in crypto. It's all like multi-sigs. It's private execution environments that, and it's not even a real multi-sig because they don't have that concept. It's like multi-party compute. It's a mess, basically. It's just like, I'm trying to keep it in more like layman's terms. It's technically a mess. It's definitionally centralized by the people who are operating the so-called layer two. Now, the reason they do this is basically just to get away from fees, right? So fees come down and potentially there's other benefits around. Like you don't really get programmability benefits because the whole thing with Ethereum is it's, you know, you can write any smart contract you want, but, you know, maybe speed, whatever. But at that point, you have to ask yourself, well, if you're completely reliant on whoever's like the operator of the layer two, like why are you even using a blockchain in the first place? Like, what's the point of this?
Right. If you want speed, if you want efficiency, if you want, yeah.
This is what I think is far more likely. Yeah, exactly. You should just use a database. This is what I think is far more likely to happen in terms of how this all progresses, that they'll first do, well, not more likely to happen, but like more likely to be the culmination of it. They'll issue them all as like layer one tokens. They'll have the fee thing. They'll move to some ridiculous so-called, but not really layer two. And then the actual stakeholders, in the sense of like, they have a lot of money on the line, will realize they should just use a database. Like they don't need to be paying all these intermediaries because they are like the intermediaries are basically just running a database for them and periodically faking settlement on the underlying blockchain. And so then the reason for Tron being funny is that the reason Tron has the most value, again, just roughly speaking, for over most periods and most ways of defining it, Tron has the most value settled in terms of stablecoins, is that it is the blockchain that is pretending the least not to be a database. Right? So it's just like giving up with this, like, oh, we're a smart contracting platform, you know, decentralized application bullshit from 2017. They're like, no, we're basically just for clearing stablecoins. You use this if you want to. But again, you should be asking yourself, why? Like, why aren't you just using a database for this? And so this is, you remember right back at the start of the explanation, I'm like, you should be suspicious about, even, okay, yeah, there's product market fit. It's better than Fiat because Fiat's also just like kind of a shit database. This database at least works better, but it could work even better still. And there's not really any reason to be paying any of these people.
It's pretty cool. I like it. Okay, so most people think of stablecoins as digital dollars. What's actually going on behind the scenes when someone uses a stablecoin, and why does it matter who the issuer is?
Yeah, I mean, what's going on behind the scenes is not all that interesting. It's pretty straightforward. It's just that the issuer, I mean, we may as well just say Tether because the vast majority of it is Tether. For now, at least. We can come back to that though, because I think that's an interesting avenue for when we get to talk about Lightning. It's basically like fiduciary. Sorry, I don't mean for this to be too jargony, but it's like fiduciary media from Tether. So it's like, you can make it a bit funnier actually and say something like, it's a promise to pay the bearer on demand this amount of dollars, but in the sense of like, you had to send Tether those dollars to get the token, and then they'll do the same. So it's kind of like a fully reserved bank in a way. So this is another reason that you could argue it's better than Fiat.
Yep.
Or commercial Fiat banking.
Yes.
No commercial Fiat bank
will have
fully reserved.
Except for maybe Caitlin Long if she manages to pull it off.
Yeah, I mean, that'd be amazing, but I don't think they're going to let her do it because it unravels their whole scam.
Yeah. You know that she has applied for a stablecoin together with another.
Is this a more recent thing? Because I've been kind of following on and
in the last
years.
Yeah, I think it's in the last year.
I admire her persistence.
Yeah, to get her together with another small community bank that has a master account with the Fed, which she doesn't. So they joined forces in order to apply for a stablecoin now. This is a relatively recent development.
Right.
Yeah,
right.
And I think she may get that because she's in collaboration now with another bank. Just saying. Yeah.
We'll see. I mean, is that relevant?
Yeah, of course, we'll see.
Recent political developments that I have proclaimed ignorance on? Probably.
I've just interviewed her a few weeks ago, and so I put that interview out there, and she was talking about that too. Yeah.
Cool. So yeah, I mean, that's what Caitlin's been trying to do for a while is basically what Tether has done. When you transfer,
full reserve commercial bank.
It's basically just full reserve bank, with the weird added quality that they kind of, here's one interestingly, probably relatively neutral way of putting it rather than me calling it like shitcoining or something like that. They outsource the ledger to public infrastructure. So they don't have to keep track of it themselves.
Yep.
They just say, here's a token. And it's like kind of a bearer instrument. It's a bit weird. And this is like back into the overlap with like, why are you even doing this on a blockchain in the first place? It's a bearer instrument in the sense that the right to reclaim the dollar from Tether is with the holder of the token. But it's not a bearer instrument in the sense that it doesn't have any value otherwise. It's really credit from Tether. So it sort of depends what you mean by that. I mean, it's like cash in some sense. It's like dollar cash.
Yep.
So it's as much a bearer instrument as cash is, but it has a lot of the same flaws, especially of fiat cash. It's actually way worse for privacy now. I think I don't mean to go too far down the road.
Yeah.
Comparing it to cash necessarily. But comparing it to Bitcoin is really interesting because the weird thing, I mean, you're asking about what happens when people transfer it. It's only a bearer asset so long as Tether actually pays you, right? Like, and even there, that's weird because they're paying you back dollars, which is also like not really a bearer instrument because it's like all fiat bullshit anyway. So it's very tentative, like where the value is or if it even exists. I think the healthier way to see this is like, don't even focus so much on the dollars. Don't think too hard about where there is or isn't value because a lot of that collapses into just fiat being bullshit anyway. Just think of it as payment rails, right? It's payment rails that even in spite of the issues I just described, outside of them being an issue, which is amusingly when not that many people are using it, it's way better payment rails than most fiat. Not all fiat, because there's all kinds of funky ways that can work. but it's clearly better in a lot of ways for a lot of use cases, and that's why it's found product market fit. But there's kind of there's a weak link in the sense that there's an element of decentralization theater, because ultimately you don't need a blockchain to do this, right? Tether could just run a database, right? They could not outsource the ledger to public infrastructure.
Right.
They could just keep their own ledger because they sort of have to do that anyway. Like I don't know the inner workings of Tether, but I'm sure that even though they're outsourcing it to like these tokens exist on all these blockchains, they probably keep their own ledger anyway so that they can make sure that they're redeeming properly. And also maybe I'm using comparison to cash too, redeeming in compliance with whatever government edicts they are given, like don't redeem this guy's Tether because he's a baddie kind of thing.
Yeah.
And so that's where the obvious contrast to Bitcoin is that, and is why you can't weasel out by saying, oh, this is money on a blockchain, because it's not the native token. It doesn't have any endogenous value, right? The value is exogenous. It's entirely relative to things outside this system. And ultimately to the trust of the participants who are saying they will uphold that value, but could just change their mind at any point. And none of this applies to Bitcoin. So that's why it's a bit suspicious. That's why hopefully that ties together a few things that, like, if you just think of it as payment rails, you kind of lose a lot of this, because you don't need, like, nobody cares really when you're talking about normal, even outside of the Bitcoin context, just like within fiat, it's sort of taken for granted. Like, okay, you're using fiat for this. The only real question here is like, how much are you paying? You know, what's the fee and what's the time for this to settle over a given rails, right? That's basically what you achieve with stablecoins. It's just slightly better rails in some cases, but this weird decentralization theater that suggests you should just use a database instead.
Got it. Okay, you described Lightning and Taproot Assets as a fundamentally different approach to payments. What makes this model so powerful, and how could it eventually change the way money moves globally?
Okay, so this is kind of tiptoeing towards basically just using Bitcoin. That's what I want people to keep that in mind as I'm giving this explanation. I make that relatively clear, I think, in the piece, but I don't at all mean it as like a kind of apologetics for stablecoins. Again, I'm not saying it's a good thing or a bad thing. I'm saying I think this is the direction it probably will go in. As it happens, I think that's good for Bitcoin, but we're a bit away from kind of understanding why. The major difference with how Taproot Assets works, and I don't mean, it's probably not a great idea to go into like super technical explanation of how it works. I wouldn't be the best person to give that anyway. But just works in the sense of like what is going on, even to some extent, what is the user experience, is that they're tokens issued on Bitcoin. Like they have the same kind of peculiarity in terms of being like real world assets. They have no exogenous value. It's completely, you're reliant on the issuer. You're trusting the issuer. They're giving you like digital cash kind of.
Yep.
So you accept that as a starting point, but you tap into using, I wouldn't even say Bitcoin, it's like using a blockchain in an actually sensible way, which is to route value. So this is now more specifically attacking the payment rails piece. And what I mean by this is as follows. And actually, I'll step back just for a second and address something I kind of skimmed over before in terms of how Tether works.
Yep.
That hopefully, I mean, I very much believe this. That hopefully once I give the context, people will say, oh, that is actually interestingly different when you do it with Taproot Assets. So yet another reason that it's sort of weird decentralization theater using the blockchain for Tether, and a consequence of like, it may as well just be a database, is that both the sender and receiver have to trust the same issuer.
Yep.
Right? Because you're just receiving the same promise to pay. And it's not at all obvious how you could ever hope to fix that. I know, okay, maybe you think that like that's not even a problem, but this actually goes back to, you mentioned right at the start, you know, the concerns about CBDCs. That I think is the major, this is like the slippery slope to how it even becomes a CBDC.
Yep.
Because the fact that the sender and receiver have to trust the same issuer, this is basically like saying in fiat world, you know, even though the rails are conceivably better, like we've covered that at length now, in fiat world, everyone would have to use the same bank, right? Which is like, that just doesn't happen. That's kind of weird. Like nobody even thinks that way. You think you can pay someone no matter what bank they use.
Right.
It's just a question of like, again, it's fees and time, right? It's like, this is the essence of payment rails. Payment rails are basically between different banks. That's ultimately why we care about them. Because if we use the same bank, they just relabel their ledger and it's nothing. So that's actually a really helpful framing to thinking about the weirdness of Tether. It's like, if you're just given you have to use the same bank, and all it really means to send, to have a payment between two people who are using the same bank is to relabel a ledger. Why is any of this public? Why isn't it just their private database? Why are they doing what I'm describing as outsourcing it to public infrastructure with the privacy headaches? More important, I shouldn't say more importantly, more relevant to our discussion, to the costs, because fees are going to spike if too many people use it. You don't have that problem if you're using a database. The fact of the decentralization part kind of being a LARP, the need for payment rails kind of being a LARP, because everybody's trusting the same issuer. This is basically what's addressed by the Taproot asset design. So they're tapping into what, a blockchain is actually for, which is settling real value. And they're pushing it a bit further by actually making it operate over Lightning, which is especially cool because that's, basically instant, or is pretty much literally instant, and a very, very small fee. Mm-hmm. And what this unlocks, it still is, you got all the caveats. It's still bearer instrument. It's still fiat even. You're still trusting the issuer, but the sender and receiver can now trust different issuers. That is really, really cool. I guess from the start, again, aside from, totally get why Bitcoiners would just be like, don't care, using Bitcoin, don't want to use a bank, don't want to use any of this. That's fine. If your starting point though is recognizing stablecoins have clear product market fit, I think you should care about this quite a lot. Because one, you can get actual competition in the issuer space rather than currently it's basically, I don't know the exact stats as of right now, but I want to say it's something like 80% of the issuance is Tether, 19 is USDC, which is basically just a regulatory carve out because Tether is not allowed to operate in the US. If it wasn't, government threats, Tether would be 99%, and then 1% is everybody else combined. And this is basically the reason, because again, I don't want to repeat all the same reasoning, but like you have to trust the same issuers. Right? Everybody has to use the same issuer in that technical paradigm. The Taproot Assets paradigm basically solves every one of these problems other than that you're still using fiat. But even that is something we can come to, because this is why I'm excited about the direction it's going in. I see the whole thing as effectively a Trojan horse for Bitcoin, because you yank the payment rails onto Lightning. You give people a means of issuing stablecoins that are just as good as crypto-based stablecoins on everything that they are actually good at, on everything they're better than fiat at, but are also way better on all the things that the crypto ones fail at, which is that they actually, the cost issue is kind of like nicely the inverse, in that Taproot assets are going to be the most financially difficult when, like right now, basically, when they're first starting. The more and more people use them, the cheaper they're going to get. Mm-hmm. So there's a bootstrapping problem, which I don't pretend to know how to solve, or like how Lightning Labs and Tether and so on are going to solve it. But if they do, and they get sufficient volume, every additional user becomes cheaper for the network as a whole, whereas in crypto, every additional user becomes more expensive.
It becomes cheaper because of the volume?
Basically, yeah.
Yeah, because the demand grows.
The fact of it routing over Lightning means you don't have this gas issue. Mm-hmm. The full explanation is probably not worth going into. People will recognize what I'm talking about if they've looked into this, but it's to do with how the payments are routed. Okay. You're more likely to find a route successfully through the Bitcoin denominated part, which is Lightning in the middle of the payment. You're more likely to find that successfully the more issuers there are, because it's basically the more endpoints on the payment. I realize that isn't actually an explanation. Yeah. It's probably not worth going into a more detailed explanation. But it will get more useful the more people use it. So it's better on cost. But the issuer thing, I think, is really, really interesting, because it means that you can actually, there can be competition there. Like there can be.
So it really opens the door for other stablecoins to step in and.
Well, other issuers. I think that's the really interesting point, that it means that we don't all have to use Tether. Like to the extent that, you're worried about that centralization vector.
Yes.
this is a technical paradigm within which there can be unlimited issuers. I mean, there's probably a natural cap in terms of like how many dollars even exist and so on, but it's not at all obvious what it is. There could be thousands, tens of thousands, hundreds of thousands of different issuers. We don't really have any idea how this is even going to evolve, but I think it's fairly obvious that it's better than there just being one, basically.
Right.
It's much healthier from basically every perspective. I mean, it probably doesn't even need explaining, but even some of the subtler issues around like privacy, for example. So for example, you could have a version of Tether that basically nobody even knows who runs it, which would clearly be better than what we have now. And it runs purely on reputation. Say that's not possible. There's no way that could ever have happened in crypto because of that kind of market dynamic. So that I think is the first reason to be excited about this potentially moving to Lightning.
Okay.
Which I'd go a bit further. No, I wouldn't say potentially. I think it will happen. It's just a question of, in the previous answer I gave before we were talking about Taproot Assets, how much of that headache in crypto needs to be internalized by everybody realizing that actually Taproot Assets is the superior way to do this.
Yeah, I mean, this is forward thinking. I don't think everyone will see what you're talking about now as the clear pathway to the evolvement of this space.
Some Bitcoiners will, some crypto people will. Most crypto people won't because they have a vested interest in denying this or not recognizing it exists in the first place. And they're the ones who unfortunately have the attention of broader fintech who are now edging in. And I forget exactly how I put it in the piece, but I made some joke about like, they're going to spend 5 years and however many $1 billion working this out.
Yeah.
But
and you cracked.
That's back to my temporal arbitrage. We figured it out now. So eventually we'll sell them our companies.
Early.
Yeah, we're so early.
All right. You end your argument in the article by introducing eCash.
Yes.
For someone who's never heard of it, what is eCash and why might it be the most private, scalable form of digital money we've ever seen?
I similarly don't think it's worth trying to give a technical explanation because you'll get into all kinds of like cryptography gibberish.
Yep.
I think it's probably fine to just say that it's the most private form of digital money.
Just say, trust me, bro.
Like, yeah, trust me. Well, but don't trust me. Like, trust the math, right? Like, yes. Look at the math. Convince yourself this works.
Yeah, go check out on eCash.
One thing I'll give like slightly more technical detail. It's when you make a eCash transfer, it is still it's a credit instrument ultimately. It doesn't need to be a stablecoin. I mean, it can be anything. It kind of struggle to think of it making much sense as the denomination being something other than money, but like you could do it. It's credit from the issuer, from the they call it a mint, but it's basically a bank.
Yes.
It's a ideally fully reserved bank. When you make a transfer, the bank has to sign off on it. Like you need their participation, but they don't know anything about the transfer. The only thing that they know is that you're allowed to make it. And so they're basically co-signing like this is valid. And it's kind of obviously in their interest to not sign when it's not valid and to sign when it is valid. So you got to be careful because it's still credit, right? It's still like fiduciary media. And the assumption would be that, if the denomination of the eCash is in Bitcoin, which we'll get to eventually, because then we're talking about stablecoins now, that the mint holds Bitcoin, right? Like you get the eCash in the first place by sending them real Bitcoin, and then they give you, fiduciary media of Bitcoin. In the stablecoin scheme, it's arguably, even more straightforward, at least in terms of what we're used to. Like you send them dollars, or it's the same process as with stablecoin issuance, except what you're getting, the kind of, what do you call it? Like the digital manifestation is not a token on a blockchain anymore. It's literally just data. It's data that if you want to say custody, I don't know if that's exactly the right way of putting it, but it lives on your, the device from which you intend to spend it. And you spend it with the cooperation of the mint. That's probably about as much as you need to know. But the key point that I introduced there is it isn't a token on a blockchain.
Got it.
So that's the key part in terms of where I think it's going overall. That, you know, I mentioned when introducing Taproot Assets that paradigm is far, far more sensible in terms of hijacking the payment rails as like, now we're using blockchains for a more sensible reason, which is that we are actually settling value like between different counterparties. This is like an instant settlement. This is just what Lightning is, right?
Yes.
We're just used to denominating it in Bitcoin. We're not used to talking about it in a stablecoin context. Real instant settlement of value. And it just so happens that the people at the edges are deciding to denominate it in dollars or whatever. So you're using a blockchain there for something that it is actually for, but you still have the token that's kind of floating around for reasons you might be dubious about. And so my hunch as to where this all goes, and this is now probably quite a long time in the future, but once we yank everybody onto Lightning as the rails, you're then in a position to make the final leap and like literally just cut the blockchain component. I mean, other than the Lightning part, but cut the
layer one
non-native money token, just cut it out altogether, because this is like a minor technical detail, but basically as long as your eCash scheme has some concept of hash locking, you can interoperate it with Lightning, which actually Cashew does, which is probably your audience knows what that is. Mm-hmm. So it'll work. It could work today. There are people doing this today. It's just my prediction is that for the broader market, it's going to have to go through these phases. So phase one is everyone gets excited by stablecoins. They try to do them on crypto and it breaks. Then they discover Taproot Assets. We yank all the rails onto Lightning, but we still have the stupid tokens. And then step three is we finally realize that actually even that's an unnecessary cost. It may as well be eCash because it works the same way.
And then we land there.
And then I guess the final step is like, this is all on Bitcoin now. It should just be Bitcoin. So then you swap out the dollar eCash for Bitcoin eCash, and then we've hyper Bitcoinized. Yay.
Happy ending.
Yeah.
And they lived happily ever after. And that's probably, what's your bet? It's going to take a decade or what?
So I don't know, but
timing
probably
is
way
hard.
longer than that. I mean, yeah, this is a complete finger in the air, but
yeah.
So phase one, I'm just making up these phases now.
Yes.
Phase one is fintech discovers stablecoins. I don't know, it's happening now.
It's happening now,
but
yeah.
When does it end? 5 years? Probably like one crypto cycle. That'll be when they learn, but then how long before they change anything? 5 to 10 years. Mm-hmm. Phase two, we yank them onto Taproot Assets. That'll probably start to happen soon, but it'll be like in earnest, it requires crypto failing. So starts in 5 to 10 years, ends, I have no idea.
Yeah.
And then phase three, where we yank them onto eCash, I have no idea. And then phase four, where we yank them onto Bitcoin, I have no idea.
Let's hope we're live by the time that happens.
Yeah, hopefully I'm still around.
Right.
That'd be good.
All right.
It'd be exciting to actually witness all of this.
I know.
We can listen to this podcast again.
Exactly. That's what I was about to say. If it does all come true, we can always put this podcast.
But it's okay though.
I told you so first here.
It's okay because as Bitcoiners, we have an exceptionally low time preference. See what I mean, by the way, about this being cope, right? Like we're so early. So if in 20 years this still hasn't happened yet, it's fine.
Right.
Got another 30 years.
Right.
Low time preference.
Right. It's true.
We're so early.
I would never imagine
saying this in our old age.
Right.
We're so early.
I would never imagine that I'd sit here doing a podcast on something that is so, I mean, you can see it so clearly. Obviously, I have to lag behind you and try to understand what you mean. But you can see it so clearly for something that is so revolutionary and could really change the way people handle money in the long term. And we're talking about it as if it has already happened, because technologically it can already happen tomorrow morning. Like this stuff is there. It's just that
that's what I'm saying. I saw a Nostr the other day, literally the final stage of this. People are playing around with this now.
Yeah.
So yeah. Technically,
That's
it's fine.
unbelievable.
I forget what it is. Obviously, talking about the same thing. I forget exactly what context I brought it up in earlier. Oh no, I tell you what it was. It was about. It wasn't the same thing. It wasn't stablecoins. It was talking about Axiom investments and our philosophy and so on.
Yes.
That if you can get the Bitcoin component to just be obfuscated away, then not that you have to, but like if you can, it's actually kind of exciting because this is exactly what I've just described with the stablecoins and some of our portfolio companies that are, there's not that many that are directly connected to it, but some are, I think, hopefully going to be kind of key infrastructure and all this. More just because they're key infrastructure in Lightning, but everybody in Lightning benefits if this happens. For a while, they'll be able to get away with like not really talking about Bitcoin that much. They're just like fintechs and they're just making payment rails better, which is very sneaky. I can see why Bitcoiners wouldn't like that.
That's the hijacking part.
Yeah,
That's
exactly. It's
the
the hijacking.
horse.
We're hijacking the rails. So that in the like stablecoin centric context, we're hijacking the payment rails. We're putting them on Lightning. In the more general context I described before, this is like a great way of onboarding people. Like you imagine if this actually happens, and then I know I gave you a ridiculous time frame of like between 5 years and never, but 5 years after that, you get people to realize like, oh shit, this is all worked because of Bitcoin. Like that's a great way to orange build them.
Absolutely.
It's an amazing way to orange build them.
Absolutely. And so, in that context, which are some of the companies that you think we should be paying attention to in the next few years? Some could be from your fund, some, in your portfolio.
I'll probably just mention some that actually relate directly to this. So the one that immediately comes to mind is Voltage. People probably know who that is. I mean, again, it's not... I think
don't assume my audience, they may not. So.
Well, it exemplifies a lot of what I described of what we like in that it's not at all, direct to consumer. It's very kind of R&D centric.
Yeah.
It's kind of cutting edge infrastructure development. So yeah, I guess on that basis, maybe people haven't heard of it. But I think it will be, I kind of flippantly referred to like, oh, we'll see what Lightning Labs does. We'll see what Tether does. I think Voltage is probably the third most important company in getting Taproot assets to work. And actually, for what it's worth, when we invested in Voltage, there was no such thing as Taproot. Like we invested in them as a foundational Lightning infrastructure company,
right.
And it just so happens because of the way Taproot assets works, it's likely to be pretty instrumental in enabling people to use it. So that's a good one. Another one that I'm stretching it a little bit here. We can come back and focus a bit more on stablecoin specifically if you want, or like any part of that whole thesis. But Arc Labs is something I'm really, really excited about. This is going to sound like I'm massively changing the subject, but like for the audience, Arc is a much more novel, basically layer 2 protocol. It's like similar to Lightning, but different in interesting ways. It's only a little over 2 years old as an idea. There's only really 2 companies, as far as I'm aware of, directly working on it. Arc Labs is one of them. We've invested in them. So, I mean, it's interesting for a whole host of reasons that are more like, I don't know, less commercial, more like technical R&D, scaling is cool, blah, blah, blah. The reason I thought of it now, though, is that something they actually demonstrated pretty recently is, I'm going to skip over like masses of technical details here, but they can, basically they figured out a way to manipulate Taproot assets also in their layer 2. Mm-hmm. So you can think of Arc, it's like super high level and not at all informative, but it's a way of moving Bitcoin off chain similar to Lightning. It can interact with Lightning in kind of interesting ways. And basically if somebody has issued a Taproot asset, the obvious assumption being that they want it to be able to be sent back and forth over Lightning. You can also send it back and forth over Arc. Mm-hmm. So that could potentially be super relevant to this too. To the extent that stablecoins take off as Taproot assets, I would expect Arc, the protocol, Arc Labs, the company, to be pretty heavily involved in basically commercializing that, like making it more user friendly for businesses.
Cool. So Arc Labs, Voltage, any other ones that we should have on our radar?
I can give super interesting examples of basically ones that have very little to do with, or like nothing to do with what we've talked about so far. I'm just thinking that like, I mentioned at the start that this is kind of quite niche within Bitcoin. Like it doesn't really exist at all within Bitcoin right now. So the ones that are most obviously going to impact it are the ones that are basically what I describe voltage as, like core Lightning infrastructure. I do think though that if it starts to take off, probably every Lightning company benefits to some or other extent, because we basically just need a lot more liquidity on Lightning in order to actually facilitate this. That's kind of tied in with the point. Again, I'm not going to explain this in too much detail, but I mentioned before, the bootstrapping phase is going to be the most difficult for Taproot assets at all. And it's going to get cheaper and cheaper after hitting some kind of critical threshold. Is basically the same point as that. That the reason, part of the reason for that, again, without really explaining it, is there's significantly more, there's like orders of magnitude more value in currently issued stablecoins on crypto than there is in Lightning, full stop. Never mind, how people might want to use it for stablecoins rather than for Bitcoin. So that will need to go up significantly in order for the kind of leakage to start to happen. But once it does, probably not even infrastructure, like I think Voltage is pretty solidly an infrastructure company, but just Lightning payments company. And we have a whole bunch of them. So there's rattle off a few like Ibex, and you're familiar with them, GetBit in India. CoinCorner has a lot of this. They're primarily an exchange, but they've been pioneering a lot of Lightning work going back years and years now. Who else? Neutron in Vietnam, Southeast Asia. Musket's a super interesting one too. They're maybe a bit more removed from what we're talking about, but they're tackling merchant acceptance of Bitcoin. And it's just, if you get that, then it is probably pretty obvious how it sort of falls out of this, that if Taproot Assets works, there's some overlap there with ARC potentially as well. It's very much in Musket's interests to enable their merchants to accept these stable coins as well as normal fiat, as well as Bitcoin, as well as Lightning, etc. So there's knock-on effects for probably anybody that's building on Lightning. It's more or less direct in the sense that Voltage is going to directly facilitate it. Musk is just going to benefit from it, but it probably touches everything. It's exciting.
Wow, this space is amazing, dude. Wow, and
that's only stuff that I can
just off the top of your head,
go out my way to make the case will have something to do with stablecoins. There's loads that just won't at all.
Yeah. It sounds like you love what you do.
I do.
You enjoy it?
Yeah.
You get up in the morning and you're
I kind of skipped over that. I alluded to it very briefly, but just at the very beginning, describing my background, that I really liked my previous job, right? In no way,
sounds like it.
In no way at all did I rage quit because I'm sick of TradFi or anything. Which a lot of people do that, and obviously I don't. If you hate your job, obviously you should you should probably quit anyway. But you should certainly quit to work in Bitcoin. But just to emphasize that that's not what happened to me. It was entirely a pull and not a push. It was before I was describing it more in terms of this is commercially viable.
Yep.
That was an important realization, because obviously it doesn't really make sense to do it if it's not, but it's just so much more rewarding and so much more interesting. It's probably obvious why, but in hindsight, I maybe didn't even appreciate that enough at the time. I think at the time it was more kind of cynically driven as to we could this could be a cool business. I didn't know there's anything wrong with that, but I definitely didn't appreciate then as much as I do now how much more interesting and more fun it is, for sure.
So in that kind of space, and with you doing the amazing work you do, and thank God people like you exist, because there are not many of them out there. Where do you draw inspiration, aspiration, hope from?
Ooh. Just completely in general, not...
Yeah, because this is, you're obviously passionate about what you do, and it gives you a lot of motivation and drive, a lot of fuel in your life. And I'm just curious about what drives you in general, because this is one of my favorite questions in the end of my podcast. Normally, to ask people what gives them that spark, that motivation, that aspiration to keep going.
Honestly, I'm kind of wary of just giving a cringy answer of like fix the money, fix the world. But like, it's not that. It's just like not original. It's not cringe, but it's.
Who cares that it's not original?
Well, I want to give a more interesting answer. Like,
you know what? This
is everybody who works in Bitcoin has some element of that for sure. It just wouldn't make sense not to, because it's too stressful. It's too stressful to do it purely for how much money you might make. Say, like at least in terms of anybody I've ever met, I don't think anyone's ever told me like, I don't give a shit about fixing the money. I just want to make loads of money. Like no one's ever said that to me. So I kind of have to acknowledge that. Well, I have to acknowledge that it is true and it definitely applies to me, but also that it's hopelessly unoriginal. So I'm now trying to think of a better answer, or at least a more interesting answer, not a better one. Something that did come to mind actually. This is maybe a little bit cringy as well, but I think I'm uniquely positioned to give this answer, whereas I'm not at all for the previous one. That the main reason I like what I do so much. This is going back to what you commented on just a moment ago. And especially relative to my previous job, where in my previous job, which again, I did really like, basically what I did all day was think about how companies work. And I was very privileged to also have access to a lot of the people at these companies, like unusually so for how big and, big in terms of like value, but also, revenue, say sales, employees, like every measure of big. We're basically talking about the biggest companies in the world. So a lot of people would find that really, really appealing, and I really enjoyed it. But the major difference now is the companies I speak to are many, many orders of magnitude smaller, but they're doing something that I find intrinsically much more interesting.
Yeah.
So it probably apply to any company I mentioned so far, but like the fact that I can talk to the founders of Arc Labs or Voltage or Musket, I can just do that. And in fact, I have to do that. It's not just I can do that. It's like, it's actually, I have a fiduciary responsibility to do that. That's awesome. And it inspires me as well. Like that's the part that is by far the most rewarding part, is like having an excuse to be that close to what's happening. Also keeping in mind that I'm nowhere near technical enough to do it myself. So this is why I'm like, when you're saying, thank God you're doing this, I'm just like, I can't help but laugh at that, because anybody could do it. Like
no.
seriously, no, I'm completely serious.
You really think that? No, not many people can do what you do.
There's a far lower bar to contributing the way I'm contributing relative to the people I just mentioned that I get to interact with.
Fair enough. I'll take that. Okay.
Yeah.
But don't be so modest. But because really,
it's just true. It's not modest. It's
okay. I can argue with you on that, but I won't do that. I truly, humbly appreciate your level of complexity of thinking. You go very deep, and
thank you.
And you can keep a trail of thought. Man, you do it well. You do well.
I'm not sure that's true.
It is true.
Oh, okay, you followed it, so that's good.
I did.
I lose myself sometimes.
And you're great, and I really appreciate your Think Boy hat. Keep doing that online.
And sorry, I lost my voice as well. You can edit this out.
Right, people don't know, but before this, you gave a 2-hour, 3-hour.
I went way over because
right, so you did almost a 3-hour class for the students of Plan B Network. So you have an excuse for losing your voice. This and that.
And then we went to lunch.
And then we went to lunch.
I got yelled at for ordering a cappuccino.
Right. So people need to know that we're in Switzerland, but technically I think we're in Italy, because everyone around us is Italian and they speak Italian, and the restaurants we go to are Italian and the waiters are Italian, and Alan just asks randomly before his main dish comes in for a cappuccino with milk, and all the Italians around the table go,
I didn't specify with milk.
With milk,
cappuccino.
Of course.
I'm kind of tired.
It's not even an espresso.
I just talked for 3 hours. I want to perk up a bit.
And they go, are you kidding us? What are you doing?
I mean,
what is this cappuccino?
We need high cultural standards.
And I think that
Bitcoin
because of
this.
you, next year they're going to add to the curriculum some guidelines on how you should behave in Lugano.
They should.
Right?
I would have gone to that class.
Because that was a big no-no. But they like you, so you're lucky.
This is the note we're concluding on, that with my
Yes.
sincere apologies to everybody from Plan B.
For insulting you with my
Everyone
request for
in
cappuccino.
Lugano. All Italians, I guess, while we're at it.
The whole world.
It was
Italian
the CEO of Arc Labs, by the way, who
That was-
started the pylon.
Outrageously.
Given he is an Italian.
They all went around the table. Shame, 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 shame.
So anyway, yeah, I lost my voice. Sorry about that.
I forgive you. We forgive you. Thank you so much for the valuable information and for sharing yourself so generously here. Thank you.
Thanks for being with us. Please take a minute to give this episode a like, a comment, and subscribe or follow. And please share it with your friends so they can also get value and choose to take some positive action in their lives. Till next time.